Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, we are back after a day-long break. It was a good thing that we had a break yesterday because on Tuesday night, the global cues weren't all that great. Yesterday, we had quite a bit of a sell-off across Asian markets as well. But all has stabilized now, all is well, given the fact that we saw a good recovery play out on Wall Street overnight on the back of a rebound in AI related stocks thanks to good earnings from AMD. And of course, in terms of data as well, the ADP employment report, private jobs report came in better than expected. So yes, good data, and even the ISM services index did pretty well. It came in at 52.4 vis-a-vis the level of 50. So yes, things are looking pretty much better this morning. Good cues to digest, which is why the GIFT Nifty is also hinting at a 30 to 40 point uptick. Tuesday was the weekly expiry on the Nifty on the NSE. So that's why we did see a fair bit of volatility. In fact, we ended below that 25,700 mark. In fact, even 25,600 mark was taken out. Today, it's the Sensex weekly expiry. So we'll have to see whether or not we can stage a comeback, get our mojo back, or will the expiry related volatility keep a lid on gains. That's what we will be watching out for. Lots of numbers, a slew of numbers to digest. We had Sun Pharma reporting numbers yesterday. Numbers were a beat. You have IndiGo as well that reported numbers. Paytm reported numbers. Some news relating to Britannia as well. But there as well, numbers were fairly strong. So all of that will be reacting to numbers. There are some changes in the MSCI Index as well, EM Index. Which are the inclusions and exclusions? We'll be talking about that as well. We'll take up all your stock related queries as well. So keep them coming in. We'll get them addressed on the show. So yes, lots lined up over the next 1 hour or so. So keep at it. Stay with us. And of course, before we move any further, let's take a quick look at the top headlines at this hour. Wall Street indices end with modest gains as investors shrugged off worries around stretched tech valuations and focused on the Supreme Court hearing on President Donald Trump's tariffs. Markets in Asia open higher, tracking gains from Wall Street. The GIFT Nifty is also indicating a positive start for the Indian market. Crude prices extend losses as concerns over oversupply and weak demand weigh on sentiment. Meanwhile, gold futures trade below that $4,000 per ounce mark after stronger than expected US payrolls data. In a nearly 3-hour hearing, the US Supreme Court justices expressed skepticism about the legality of aggressive tariffs imposed by President Donald Trump. Now, Treasury Secretary Scott Bessent and Commerce Secretary Howard Lutnick were in attendance even as Trump chose not to attend. Questions were asked on how Trump's administration was enacting the tariffs. In key earnings, Sun Pharma reports an operational beat in the second quarter with revenue in line with estimates. Meanwhile, Grasim reports better standalone results led by the chemical segment. Revenue from operations rise 26% from a year ago. However, airline operator IndiGo's net loss widens during the second quarter on the back of higher forex costs. Polling in the first phase of Bihar Assembly election begins for 121 constituencies, which is set to decide the fate of the 2-decade-long Nitish Kumar-led NDA government in the state. Several high-profile candidates, including RJD's Tejasvi Yadav, BJP leader Samrat Chaudhary, JDU's Shravan Kumar and Tej Pratap Yadav in the fray. All right, taking a look at what really transpired in Tuesday's session, we shed over 150 points on the Nifty to end at the day's low. The Nifty, as I mentioned, ended below the 25,600 mark with 40 out of 50 stocks in the red. It was only the consumer durables pocket that managed to end the day in the green. All the other sectoral indices aside of that ended in the red. Metals, of course, were the biggest laggards. You had autos, of course, slipping in the red, IT extending its losses. All the sectors, as I mentioned, were in the red. The market breadth was also in favor of declines. Mind you, on Monday, we had the Nifty Mid Cap Index hitting a fresh 52-week high, but that kind of reversed on Tuesday We had the broader markets also coming under selling pressure, which is why the breadth was also in favor of declines. The advanced decline ratio on the NSE was at 1:2. Lots of result reactions, stocks or companies that have missed expectations have been punished, but there are companies that have been outliers in the second quarter, and they have been rewarded fairly well. Case in point, Thangamile Jewelry, that stock saw double digit gains in a matter of 2 sessions, good set of numbers, and of course 30% gains in 2 sessions for Thangamile, and of course rewarded on the back of good earnings, and also the fact that the company has raised its revenue guidance. A lot of other movers as well, but let's take stock of the fund flows. So to say, FIS selling continues. They were net sellers to the tune of over 1,000 crore rupees in the cash market. On Tuesday, in the middle we did see some bit of buying coming in. We did see the sell-off kind of abating, but once again that has picked up pace, and in the last few sessions we have seen FIIs selling in the cash market. In terms of the domestic institutional flows, the buying continues. 1,200 crore rupee worth of stocks bought in the cash market. Put call ratio, it jumped to 0.93 vis-a-vis 0.78 in the previous session. So all in all, Tuesday wasn't a great session, but let's see whether or not global cues could provide some bit of a lift up to sentiment on the Lal Street. On that note, let me bring on board my guest for today. Joining me is Chandan Taparia, Senior Vice President, Head Derivatives and Technical Research at Motilal Oswal. Chandan, lovely chatting with you. We've taken out 25,600 and 25,500 happens to be a crucial support level for the Nifty, but given the global setup, given the cues we're getting from GIFT Nifty, given the kind of earnings we've had, do you see some bit of rebound today, or would you say that Sensex expiry related volatility will keep a lid on the gains? What are your thoughts?
Good morning, Nandita. Thanks for having me. So Nifty started to form lower top, lower bottom on the daily chart, and we have seen a corrective move of around 500 points from its recent high of 26,100 level. The market, which was earlier having the support at 25,550, if that broken decisively, I believe market might see further reaction or the correction. But as of now, it is very important for index to negate the lower top, lower bottom, which is forming from last 4 trading session. So till it holds below 25,700, I believe some more profit booking decline could be seen, which can take the index towards 25,500 to 25,350. But on the contra, if I talk about Bank Nifty index, that has been moving in a range. On one side, Nifty is making lower top, lower bottom, but Bank Nifty was moving in a range. And we have multiple support near 57,500. If those levels are respected, I believe again recovery could be seen towards 58,000 to 58,250. So getting the mixed set of cues in both the indices where Nifty is looking for some more decline while Bank Nifty might remain in a range bound, which is comparatively outperforming. So we need to plan strategy accordingly. But yes, one need to keep in mind that upside seems to be kept as of now, as most of the data setup are indicating slightly negative bias. India VIX has seen a recovery. FI's long short ratio has gone to 15%. FI is sold. And I believe sustained call writing at higher levels is not allowing index to move or hold at higher levels.
Okay, setup looking a bit on the negative side. But what about SBI? What's the call after numbers? Numbers are fairly good, and it was a beat on the margin front as well. And management commentary is also fairly upbeat. They have revised the credit growth guidance higher as well, from 12 to 13% to 12 to 14%. Stock has of course been doing extremely well, knocking at the 1,000 mark as well. What are the next targets to watch out for? Is it beyond 1,000 rupees?
We have positive on the SBI, or in fact, Bank Nifty is comparatively outperforming, and SBI is our top preferred Diwali technical pick. And I believe I have mentioned the same multiple times, and really the stock has really do well in last almost 9 days, from 900 to now almost 960 plus. Trend is still intact, and this time the way it has given a breakout, I believe 4-digit level cannot be ruled out in the SBI. Even the commentary and the result was up to mark, so that will also aid the momentum. So now till it holds about 940, we believe the ongoing momentum can head towards 985 to 1,000 kind of levels.
All right, expect 985 to 1,000 kind of levels. 4-digit mark cannot be ruled out on shares of SBI. But let's talk about another bank that's been in focus, RBL Bank. Of course, it has attracted global capital. RBL Bank sources are indicating that a block deal has been launched and M&M is likely selling somewhere around 3.5% stake. The block size is at 682 crore rupees. Floor price is at a 2% discount to Tuesday's close price. It's at 317 rupees per share. Now, M&M of course had bought a 3.53% stake in RBL Bank for 417 crore rupees back in July 2023. Of course, there will be some bit of supply pressure because of this. But for RBL Bank at 327 or so, how is the setup looking going forward, and what should one really do with the stock now?
So as of now, the major trend of the counter is positive, and RBL has really rallied well by more than 100% in this year. In fact, on monthly basis, we are witnessing the formation of higher tops, higher bottom. It has been consolidating in a range from last 10 to 12 trading session, but supports are intact. And I believe till it holds above key support of 320, ongoing momentum can take it towards 340, 345 marks. So positive stance on RBL, buy on decline could continue to be the theme. And this is one of the strongest counter in selective private banks.
RBL Bank, of course, the stock has doubled on a year-to-date basis. 6 months, it has yielded over 60% returns as well. Chandan, there's just about 3 minutes to go for the markets to open. Before that, I would like to know what recommendations you have for our viewers this morning.
So yes, first it will be buy on SBI, State Bank of India. As mentioned, we are quite positive on the name, and with support of 940, we are looking for an upside target towards 985 to 1000. And again, we have recommended this counter with conviction on Diwali technical pick, and stock looks quite promising. Apart from that, one can look at the selective auto baskets or selective consumption theme. And Ashok Leyland is one of the strongest counter which has been consolidating in a range, but supports are inching upwards. So with support of 137, we are looking for an upside target towards 148 in Ashok Leyland.
All right, those are the recommendations from Chandan. Chandan, want to get your thoughts on OMCs. They have performed extremely well. If you look at the last 2 weeks or so, since the oil minister made a case for higher valuation for these OMCs, most of them are up anywhere between 14-20%. Do you expect this momentum to continue, or do you expect some kind of profit taking to kick in, and should one book profits now?
So as of now, trend of the OMCs are positive. However, trailing support is advised because most of these stocks have rallied well. If I start with BPCL, it rallied well from 327 to almost 375 marks. High top, high bottom formation is clearly visible on the daily and the weekly chart. Stock is quoting at its lifetime high territory. So trend still looks quite promising for an upside target towards 395 to 400. One can now keep the trailing support of 364 ongoing long position. Talking about IOC, here also the trend is positive. In last 9 days, rallied well from 150 to 170. One can keep the trailing of 165 for next momentum towards 175 to 180. So positive bias is clearly visible in most of the OMC, but already they have seen a rally of 10 to 15%. So better to trail with key levels so that you can continue with your gaining position with some support at higher levels.
Okay, that's the view on OMCs, and the major trend is still intact and it's on the upside. Just about 10 odd seconds to go for the markets to open, but Kaynes Tech, that's one stock on my radar. Numbers are pretty good. I think profit doubled on a year-on-year basis. The stock has done well in the last not 5 sessions. In fact, right now I think it is expected to open higher. Stock has kind of lost some bit of steam, right? In the last 1 month, it has lost 8 odd percent, but we'll come back to it. We'll talk about Kaynes Tech in just a bit, because we have the first ticks coming in, and it is a positive start as was being indicated by the GIFT Nifty. Right now we are above that 25,600 mark, reclaimed that level, up 40 odd points. No big gains, but nevertheless a positive bias on the index. Sensex up 250 points. Mid-cap index as well extremely flat with a positive bias, but right now underperforming the benchmarks. Advanced decline ratio although is skewed in favor of gainers. We'll wait for that to really settle down to call it a trend for the day as such. But a 50-point up move on the Nifty. We have reclaimed that 25,650 mark. Let's take stock of some of the sectors then. As to what which of the sectors are doing well and which are taking a backseat today. FMCG, that's the top sectoral gainer today, up in excess of 0.5%. PSU Bank Index, after some bit of a break on Tuesday, we are back in the green for the PSU Bank Index as well, up 0.5%. Autos, reversing course, are in the green today. IT also seeing some some shades of green. But what's not doing well is the metal basket. That's down almost 1%. I want to see what really Hindalco is doing, and if that is the top laggard within the metal pack, because some news flow with respect to Hindalco. Numbers are fairly good from Novelis, but there was a fire incident back in September, I think. So that's something that could weigh in on shares of Hindalco as well. I want to talk about the real estate pack as well. It was showing a good traction of late, but today it has kicked off the day on a negative note, and so has the pharma pack. FMCG, I want to talk about Britannia. That company reported good set of numbers, and of course there's been a management addition as well on the senior side. We'll talk about that in greater details, but the stock is up 4%, clearly reacting to a spate of good news. Even United Spirits is doing well on the Nifty FMCG index. ITC is up 0.6%, and Hindustan Unilever is also up 0.5% or so. Now let's take stock of some of the other individual movers that are doing well. Asian Paints, that's the top Nifty gainer. Of course, crude prices are cooling off, but I think there is some brokerage note as well that points out that perhaps the worst of the competition fears may be behind for some of the paint majors, which is why, which could be one of the reasons why Asian Paints is rallying in excess of 4%. Interglobe Aviation, losses widened on the back of higher forex related expenses or losses, but beyond that, Street believes that the numbers were fairly good, which is why Interglobe is also up somewhere around 3%. M&M, I think Interglobe is up somewhere around almost 3%. M&M is up 2%. Obviously, it's looking to exit its stake in RBL Bank. Sun Pharma post numbers up 1.5%. Axis Bank, L&T, even Reliance Industries showing strength 1% higher on that counter. L&T, TCS, Infosys, some of these IT names doing well. What's not doing well, as I was mentioning, Hindalco. That stock is the top laggard on the Nifty. It's down over 6%. So yes, that fire incident, I think, leading to some concern. Grasim, after numbers, not great reaction. Power Grid extending losses after a poor set of numbers. Eternal as well in the throes of a selling spree. HDFC Bank from the banking lot is also not doing well. The Nifty Bank Index, by the way, is up almost 50 odd points, 57,870. So knocking at 57,900 as well. Chandan, coming to you, Hindalco, sharp reaction. Stock is down almost 6%. What should be the next course of action when it comes to Hindalco?
Yeah, so we have seen a corrective move in the counter from last 3-4 days. It started to make lower top, lower bottom. The structure is negated, so I believe some more decline could be seen. However, still on the monthly chart, it really formed the higher formation, but as of now, it can retest to the lower level. So till it holds below 800 zone, I believe it can go down to retest the key support of 770, 765.
Okay, that's the view. 765 kind of levels can't be ruled out on a Hindalco. I want to talk about some of these pharma names, especially the likes of Sun Pharma reacting positively to its numbers, and Pharma Pack itself has seen some buying interest if you see the last 1 month returns. Sun Pharma in particular managed to beat expectations on the profitability front on the back of strong demand in India or its India business. Double-digit growth was clocked in the domestic business revenue, which climbed almost 9% In fact, revenue growth was up 9%, and that was because of an 11% jump in India sales. US revenue, however, fell over 4% to $496 million due to pricing pressure. But the company still reiterated that it plans to be among the first movers when it comes to semaglutide. And it has said that it will be among the first ones to launch semaglutide weight loss drug in India once the patent expires. Within the pharma pack, how would you equate a Dr. Reddy's with a Sun Pharma? Would you prefer the latter over the former, or how does it work?
So I'll go with Sun Pharma. The stock is comparatively holding the support zone. In fact, in last 12 days, it took multiple base near 1680 marks and now trying to give some small consolidation breakout on the daily and the weekly scale. So I believe 1680 can be utilized as a support for a bounce towards 740, 760 kind of level.
Okay, Sun Pharma, that's a preference within the pharma pack. But I was talking about Keynes Tech right before the market open. Numbers are fairly good, but the stock has had a very lackluster response to that. It's just, it's not really willing to, snap out of its downtrend. The stock has seen 11% cut in the last 1 month or so. Last 5 days also it saw a 2% downtick, and it's of course trading sub 6,700 levels as well. Would you expect more downside here, because it has already seen a fair bit of consolidation? Even good numbers fail to lift its spirits. What's the scene looking like on the charts?
So on the weekly chart, it started to form lower top, lower bottom, and levels are gradually shifting on the lower side. Last week, the hurdle was 7,000, and now the hurdle is in fact shifting at 6,900 marks. So I believe till it remains below 6,900, it can go down to 6,200, 6,250 kind of levels.
Okay, 6,200, 6,250 kind of levels cannot be ruled out on a Keynes Tech. But before taking up queries, let's get in your thoughts on a Grasim as well. The stock is not reacting all that positively. But I think numbers were also not all that great. Profit was up 11%, revenue rose 26%. Margin disappointed. It came in at 3.8%, sub 4%, vis-a-vis 4.3% on a year-on-year basis. Stock is clearly reacting to that. It's down 4%. Stock has of course been in that corrective phase as well in the last 1 month. So what are the next levels to watch out for here, and should one look at other plays within the cement pack like Ultratech, India Cements, etc., vis-a-vis Grasim?
Grasim looks weak. It has given a breakdown on the daily chart, in fact, making lower top, lower bottom. And today's gap down opening is disturbing the weekly chart setup, and I believe some more profit booking can be seen in the counter. Till it remains below 2830, it can go down to 2700 level. If I look at the other name like Ultratech, Cement, I believe negative bias is visible. However, today it has been moving in a range, but till it remains below 11,980 or 12,000, it can go down to 11,600, 650 kind of levels. So I think weakness could continue in most of the cement counter as of now.
Okay, weakness could continue in most of the cement counters going forward, but two counters I want to take up before we come to our queries. First one is Paytm. This stock is also up somewhere around 3%. The stock has been included in the MSCI India Standard Index along with GE, Vernova, Siemens Energy and Fortis. And of course, numbers also came out, although on the net level profit came in at 21 crore rupees vis-a-vis 928 crore rupees in the same quarter last year. Revenue saw good 25%, almost 25% uptick. Margins were at almost 7%, but the good part is the fact that it reported an EBITDA of 141 crore rupees vis-a-vis an EBITDA loss of over 400 crore rupees in the same quarter last year. We are seeing good traction. The stock is up 3%. Of course, these stocks have been doing well. In the last 6 months, the stock is up 60%. I think it came very close to its 52-week high as well. 1322.6, that was the high made today, and 1323.5, that's the 52-week high. What would you do with this stock? Would you see levels beyond 52-week highs sustaining in the coming weeks?
Yeah, so setup of the counter is quite positive, and after the consolidation of last 13 days, it is now heading towards its 52 weeks high. In fact, now it's heading towards its 4 year high. In 2022, it made high near 1350. In this year, high was 1323. So I think a small follow up could lead to the 4 year high zone. So as of now, buy on decline could continue. However, the broader market is finding pressure because of that momentum is missing. But till it holds above 1280, it can head towards 1350 to 1370, which is the 4 year zone for the Paytm.
Okay, that's the view on Paytm. The other stock that's buzzing is IndiGo, and it has seen a steady uptrend as well in the last month or so. There has been a massive forex loss, because of which the numbers are looking a little, not that great. But aside of that, the numbers have been fairly good. It saw a revenue growth of almost 10%. EBITDA was up 85% on a year basis, and margins also saw a great uptick, almost 19% vis-a-vis 11% on a year basis. It was just a loss figure that's looking a bit inflated because of that forex loss. But I think IndiGo has also given out a positive outlook. They've said that the Q2 loss was largely due to future dollar obligations and significant depreciation in the rate of rupee. And aside of this forex loss, they could have made a profit of 104 crore rupees or thereabouts. High flyer today, IndiGo. Thoughts?
Yeah, so it looks positive. In fact, on the daily chart, it is all negating its lower top, lower bottom of last 10 days. Recently, it formed the bottom near 55.80, holding well above its 50-day exponential moving average. So with support of 5700, I believe now this time it can head towards 6000, 6050 levels.
Okay, that's about IndiGo. 6,000 levels cannot be ruled out on the charts of an IndiGo. But let's come to our query section then. A couple of queries I want to get addressed. Let's start with a query on Senco Gold. Can it join the rally of the jewelry industry? That's I think I don't have the gentleman's name here. But any thoughts on Senco Gold? We have seen Thangamile, for instance, rally 30% in just a matter of 2 sessions. Senco, on the other hand, has seen muted moves. In fact, last 1 month it has given negative returns of over 5%. Do you expect this stock to reverse course and perhaps join the other peers?
Yeah, so Thangamile has really done well. I just don't want to miss to comment on the name. So I think still the momentum looks quite promising. However, it really do well from 2000 to 3000, but till it holds above 2850, it can head towards 3200 kind of level. Talking about Senco Gold, trend setup is mixed. The good part is it has been consolidating in a range from last 4 weeks, but before that, it witnessed a corrective move in last 2 months. So range bound bias could be seen. Those who are looking to buy can use the support near 320 for a bounce towards 350. So not looking major momentum, but yes, support based buying or range bound bias can be seen in the counter.
Okay, that's the view on Senco. Very quickly, I want to get as many queries addressed as possible. The next query on Indus Towers from Alex. I think his buy price is 253. He wants to know the long term view. If Vodafone Idea recovers its debt, will it help company to improve its financials? So that's a little on the fundamental side. But what should be done with an Indus Tower? Today, some bit of profit taking. The stock has seen very good traction in the last 5 sessions. At 388, what's the call here?
Yeah, so I believe buy on decline can be seen. Somehow the trend is shifting on the upwards. 375 is major support. If it declines to further few points, I believe one can buy for an upside target towards 400, 405 kind of level. So yes, setup is positive to range bound. So buy on decline is advisable in the name.
Buy on declines, that's the call, technical call on Indus Towers. Hope that addresses a part of your query. Next query I want to take up on a Suzlon. The numbers were bumper, I mean blockbuster numbers by Suzlon. A lot of experts I spoke to on Tuesday, some of them said that levels of 80 can't be ruled out on the stock going forward. But this gentleman has positions, wants to know whether I should stay or exit at 60 levels. What is your call?
So, Suzlon witnessed a corrective move from 74 to 52. If I look at the price behavior of last 6 months, but now on weekly chart, it is giving a breakout from its falling supply trend line. On daily chart, it has been forming the higher top, higher bottom, and supports are gradually shifting higher. So now till it holds above 57.50, it can head towards 65. So I think some more recovery can be seen in the counter.
Okay, expect some more recovery in the counter of a Suzlon. Take up a query on ITC Hotels. Geetu Sandesh has written in, holding 62 shares, should I add more or shift to some other share? How do you compare with an Indian Hotels which reported numbers as well?
So, like if you look at the ITC Hotel or Indian Hotel, ITC Hotel is making lower top, lower bottom. It witnessed a corrective move in last 10 days from almost 226 to 214, so negative to range bound. And if you look at the Indian Hotel, here also the corrective move is visible, so it can go down to 700. So I think mixed set of cues, upside seems to be kept. I think some more consolidation or correction is required before bottoming out for this counter.
Okay, that's the view on the hotel space. Hindalco we've already addressed. Perhaps you could just go back in the feed and see. Let's get in a query on some of these new age companies addressed as well. Swiggy and Eternal. Komal Makecha wants to know views on fresh entry for the long term. Eternal has been on and off witnessing some kind of selling pressure. Buy on dips for both these counters?
Yeah, so we were quite positive in Swiggy and it really on Eternal, and it really rallied well. It rallied well from 200 to almost 350s, 365 kind of level, but now lower top, lower bottom is clearly visible. So I believe let it see some more corrective move. 275 to 280 could be the best bargain buy for Eternal. For upside target was 340. So wait for further decline to accumulate this counter. Looking at Swiggy, here the structure is negative, but multiple supports are visible at 380. So one can buy or accumulate near 384. Positional target was 450 kind of level. So Eternal looks more promising than Swiggy, but yes, both the counter can be applied with buy on decline stance with the view that major trend of the counter is positive and the recent decline is the opportunity to invest for the long term scenario.
Okay, that's the view. Eternal looking better on the charts, but both are nevertheless good opportunities. 2-3 more queries then very quickly. Naveen wants to know your thoughts on Bajaj Finance, which is already close to its 52-week highs, but has seen some bit of resistance around those levels. Thoughts on Bajaj Finance, whether it can be accumulated right now or wait for more dips?
I believe Bajaj Finance can be accumulated now because already we have seen a healthy corrective move in last 10 days from 1100 to 1030. In fact, from last 3 days, it has been holding the key support near 1020 and put writing is also visible near 1000 strike on derivatives data setup. So wait for small dip, buy with support of 1000 for a recovery towards 1080, 1085.
Okay, Bajaj Finance I'm talking about. All right. Another query then, this one's coming in from Satvika on a Godrej Agrovet, whether one should hold on or exit. The stock is stuck in a downtrend. It is in fact very close to its 52-week lows as well. Would you advise her to exit, average or get out? What should the strategy be right now?
So suggestion is not to average out, can wait, but as of now looking for some more weakness. I believe it can go down to 600 to 585 before it bottoms out. Already we have seen a corrective move from 875 to 625 in last 4 months. Some more profit booking could be seen before it bottoms out.
Okay. More profit booking could be seen before it bottoms out. But there's last query coming in from Satya CK, wants to know your thoughts on office space. The stock, has again seen a fair bit of selling pressure, but it did try to make some kind of a recovery. If you look at the last 1 month chart, what do you see on the charts? Do you expect that recovery to gain further momentum, or do you expect it to remain sideways going forward? What is the view on an office space?
It's sideways. As of now, not getting sign of weakness as well as the momentum. It got stuck in between 560 to 620, and I believe same kind of behavior could continue.
Okay, that's the view on office. With that, we've come to the end of the query segment. If we couldn't address your queries, keep them coming in. We'll try and take them up on the next show. But Chandan, would like to thank you for taking out time as always and sharing your thoughts with us. Always a pleasure. And I look forward to our next interaction as well.
Thank you.
Thanks a lot. Well, on that note, take a look at the markets before we bring on board our next guest. We have completely fizzled out from the opening gains. In fact, the broader end of the markets have now succumbed to some bit of selling pressure. The breadth has also reversed, more declines than advances on the NSE. 1023 advances to 1592 declines. So, almost 2:3, that's the NSE advance decline ratio. Nifty just about managing to hold on to that positive zone, but and of course clutching on to the 25,600 mark. But from a 50-60 point uptick, we are now seeing just about a 10-point gain on the index. Of course, it's a metal pack that's leading the losses thanks to a 5% crack on shares of Hindalco. But otherwise, FMCG, that's the top, sectoral mover that one really needs to watch out for. Asian Paints up 5%, even the likes of Britannia up around 5% or so. But on that note, let me bring on board our next guest. Joining me is Anand K Rathi, co-founder at MIRA Money. Anand, lovely chatting with you again, and thanks a lot for agreeing to join us at a short notice. We're seeing the Nifty struggle around the 25,600 mark with signs of fatigue. What do you feel this phase of correction is looking like? Is it a healthy correction before the next leg up, and are we still in that buy on dips phase?
Thank you. Yes, I definitely believe that these are phases where markets ran up a little last month, so it is just taking a bit of a rest before it could prepare itself for the next leg or so. Also, I think there are two major events that they are keenly watching out for, which is how will Bihar pan out, and of course something that has been on mind of all people, which is the Trump trade deals. So till the time these overhangs are there, maybe the markets can be around this level. You close your eyes, open after a month, the levels are the same. So it can move a little sideways till the time one of them or both of them come clear, which I think can happen in this quarter, and which is more sentimental. And possibly from the Jan quarter, as you would have seen, a lot of the companies are coming out with good earnings, and the commentary has also been good. So I believe from the next quarter, it will be back to fundamental growth and earnings.
All right. But since you mentioned about the Trump tariff situation and the fact that our talks are still ongoing, we just had, Piyush Goyal yesterday saying that talks are, going on pretty well. But of course, these issues take time to get resolved. But on the other hand, you also have the US Supreme Court that's hearing the case, right? There is no real timeline as to when there will be, a verdict to that effect. But it seems like, the judges grilled the lawyer pretty hard as to how Trump could overstep and, slap such kind of tariffs on other nations. What are the chances of this going, adversely against Trump, and what really happens then? Because if there is a verdict which overturns these tariffs, that means a lot of money will have to be paid back, right? So, how do you think the markets will be positioned for something like this? And is that possible, an outcome like that? What kind of an impact would that have?
It's going to be chaotic. If it's already not chaotic, if you see the world order has already become very chaotic, It's too big a thing. I mean, law is too big a thing for us, and especially global law is too big for us to comment on. But this news has always been there that tariff itself has been a little on the illegal side. It's not acceptable, is what a lot of people have already been talking about. Let's say if that turns out to be true, the market will face a sigh of relief and may also be worried about what next can happen with under Trump's presidency. So, in my view, a verdict alone is not going to be clear and good for markets, good for global markets, Indian markets. I think people will be more concerned about what next can the same US president can take. It's going to be chaotic, no clear signs visible. So, if someone is going to focus their investment plan basis verdicts and also what can happen later, I would say don't try to do this. It's a moonshot. You cannot be very right or wrong about it. Rather try and focus more on Indian earnings, Indian companies. Look at what can grow in India and rather invest into those than worry about tariffs and the verdict of Supreme Court there.
Got your point. Since you mentioned domestic earnings, we've already spoken about how earnings have been much better than muted expectations. Commentary is also panning out to be fairly upbeat. What has been the key outlier in this earnings season according to you? And valuations wise, which sector is commensurate with the kind of earnings that they have handed out?
Yeah, in general, I think most of the companies, barring a couple of them, have, at least in the large cap space, have announced good enough earnings. In my view, in terms of valuations, large cap in general has always is slightly better than mid and small caps. While we are still assessing what the earnings and their views on mid and small cap companies, but I seriously like the fact that a good set of FMCG companies have announced a good earnings, which I thought it will not really be that true. But earnings aside, I don't see they're as good, at least on the valuation side. In other than that, I think consumption pack in general is definitely looking good. And with bumper Diwali that we have had, bumper Navratri and Dashera that we have had, I think that's one pack that is looking pretty good on the bourses. And banking was expected to deliver, and the biggest surprise has been the PSU banks. So, in my view, banks are looking good. Consumer durable pack is definitely looking good, both on earnings and also on the valuation side.
Within the PSU banking universe, would you be looking at the mid-sized ones like Bank of Baroda, perhaps Canara Bank, Indian Bank? They've already run up quite a bit. They are already sitting at 52-week highs. Would you still take a bet on them at these prices?
Yes, I strongly believe that the credit offtake will happen with all the measures that the government has taken. Credit offtake will happen, especially in tier 2, tier 3 cities, also because rural economy has definitely been a little more resilient, has shown signs of growth better than urban consumption or urban economy. So I think a lot of these banks which have deeper penetration in tier 2, tier 3, tier 4 cities will show better credit growth than large private sector ones. So it is better to be on with the PSU banks, and also you could spread between large and small mid-sized companies. But I don't see the credit growth slowing down. I would rather see credit growth picking up. So it's better to be with banks in general, in our view.
Okay, better to be with banks in general. But I want to get in your thoughts on the entire OMC pack. Ever since Oil Minister Hardeep Puri made case for a valuation re-rating and sought higher valuations for the likes of HPBP, IOC, the stocks have given good returns. Some of them have rallied 20%. Is there an investment case in the OMC pack as well, given the fact that the crude factor is also at play? Crude prices have been cooling off.
Definitely, because our view is that crude in general, till the time there is so much chaos, as we were speaking a little earlier, the crude as a commodity itself is not looking like it has the legs to go up significantly from here. Plus, a lot of global growth not happening. I think crude oil can continue to be around this level, and for all you know, if there is supply glut, it can actually go down further. So there is a case for OMCs. There is a case for companies that are using oil as one of their key components or key raw material to be looked at in a slightly different angle, saying, okay, if the prices are going to be this or lower, will it impact our profitability positively? And that's one of the reasons why we believe India as an economy in general and OMCs and few other companies which use oil as a raw material in particular are looking very strong going forward.
Okay, that's the view on OMCs. I want to get your thoughts on the EMS space, electronic manufacturing services. Keynes reported good set of numbers, but that failed to really bring about any cheer. The stock is in fact down 1.5%. These EMS companies have been witnessing a bout of selling pressure as well, the likes of Dixon, Keynes, etc. Would you say that after they are looking better, or would you wait for some more correction to say that valuations have reached a fair point? What is your thought process when it comes to this whole basket?
At this moment, it is okay to invest a bit in these set of companies. No particular great view on EMCs in general, EMS pack in general. We believe that there are a couple of outlier companies which a lot of people are already invested in, and they can continue be or buy more or stay invested in. Correction is a part of EMS. It's a little longer story. I think at least the base level work will keep coming into India, and these packs that concentrate on basic work will continue to do well. But my problem with these companies are they are not looking at adopting AI. If you see China has started adopting AI as a manufacturing in their manufacturing, doing a lot of work around that. So till the time these companies do not adopt these kind of new methodologies to upskill their own machineries, I think these will generate only low to medium returns. They don't look like global leaders, or at least trying to be a global leader also. So that's a bit of a disappointment. And so it is not very, in our view at least, it's not a very active, very exciting counter. One, if you have made some money, if you've already bought it, it's okay to be staying invested in that. I think there are better opportunities than them in the universe in general.
Better opportunities. But if I were to ask you to pinpoint, a way to play the AI theme, because of course in India there is a lack of a pure play AI, companies, right? So how are you advising your clients to take exposure to AI as a theme?
Yeah. So, for example, there are few funds, mutual funds that help you to buy Nasdaq listed companies, US listed companies. There are few mutual funds that will at least buy AI themes, but unfortunately, most of them or all of them actually have hit the $7 billion limit that RBI has. So, what we are doing for our set of investors is are using the LRS route, which is liberalized remittances scheme, under which you can invest up to $250,000 abroad. What we are doing is we are building portfolios abroad under LRS and buying specific China's AI theme or global AI theme. Or for example, even last time I mentioned I find China to be a lot more attractive than India. So you could invest into China or Greater China specific investments and ETFs as well. So we are trying to use LRS as much as possible to participate in the global growth story. While if the limits in India open up, which will happen maybe after April, because that's when the new financial year kicks in, you could definitely or you should participate at least 20% of the portfolio into global funds is what our strong view is.
Okay. Through the LRS scheme, that's how one can take part in that AI opportunity. Point taken. But Anand, which are the sectors that are looking extremely overheated or overhyped at the current juncture, and one should keep away from? Is there any such pocket that you are in your view?
Not away from, but we are definitely not very happy with the valuations at which a few of the FMCG companies are. Despite giving single-digit earnings growth, they continue to charge a lot of PE, in the sense they are valued at much higher PE. So that is something that we are little wary of. Of course, there are going to be some good ones you can always pick in that pack as well. But in general, we don't find that to be extremely attractive. While we find consumption to be attractive, we don't find FMCG to be as attractive. I don't like pharma as much, while it can give some single-digit returns. But I find as a contra bet IT better than pharma. So these are the couple of packs that we are not excited about to invest into. But in general, we are okay with investing into consumption as a story and banking as a theme.
Okay, consumption, banking, and of course IT being the contra theme. But if I talk about the premiumization theme per se, which end of the spectrum would you play through? Would it be luxury cars, luxury real estate, or for that matter, some travel related stocks, I mean, OTAs, liquor, anything that's on top of your bucket list?
Definitely liquor, because I think I have spoken to a few set of people who are in the industry. So they definitely see a good quarter this time around, and even around Diwali, they were saying premium liquors are flying off the shelf, while the sales in general has been subdued, but premium liquors have taken off through the roof. That is something that one should definitely look at. And as you rightly pointed out, luxury real estate or budgets where for real estate has significantly gone up. I live in Bangalore, and they say the sweet spot for a lot of younger audience is about 2 to 2.5 crores of budget for real estate. So which earlier used to be about 1 crore or so. So premium real estate, anything that can offer you a lot more amenities and those kind of luxurious opportunities are something that is looking good on the real estate side. Liquor definitely is looking good. While I want to participate in, let's say, cars, luxury cars, I don't think there are enough and more listed companies in that space. So I would still stick to someone who's adopting EV far more attractively. But for the premiumization, I think liquor is a easier bet at this point in time, at least for a couple of quarters.
Okay. All right, that's the view then on the premiumization theme, luxury real estate, liquor, these are some of the pockets that one can look at and position themselves when it comes to the theme of premiumization. With that, Anand would like to thank you for taking out time and joining in this morning. Always a pleasure, and look forward to our next interaction as well.
Thank you. Good day.
Thank you. Well, let's take a look at what the markets are doing. Not doing much. In fact, they are where they were at when I did the last check on the indices. 25 point up on the Nifty, holding on to the 25,600 mark. Sensex, although has seen some bit of a recovery, 200 point uptick, but the broader end of the markets continues to fret. The Nifty Mid Cap Index in the red, advanced decline ratio now 1:2. And of course, if you talk about the big laggards on the index, it's Hindalco. Novelis numbers came out, and there was of course a fire incident because of which Novelis will face some kind of an impact, and because of that I think we are seeing a 6% cut on the shares of Hindalco. Grasim also weak set of numbers, stock down 4%, margin disappointment. Power Grid was also a disappointment, that's why it's extending its losses. It's among the top Nifty laggards. Max Healthcare, Eternal, Adani Enterprises. Adani Enterprises, of course, board approved a fundraise plan of over 25,000 crore rupees on Tuesday. Ever since then, the stock has been under pressure. Bajaj Finance under some bit of profit taking. We have Bharti Airtel as well under profit taking after a good day on Tuesday. HDFC Bank under pressure. HCL Tech is also in the red. On the flip side, what's doing well is Asian Paints, up now almost 6%. I think some brokerage comments on how competition, worst of the competition fears may be behind us when it comes to the paint sector. And of course, crude prices also cooling off, that's an added positive. So Asian Paints, top Nifty gainer. Interglobe, barring that forex hit, numbers have been pretty good. EBITDA grew 85% on a year-on-year basis. Stock is up 2.5%. Reliance Industries gaining traction. That stock is now up almost 2%. Reliance Industries. That's why I think it's managing to keep the Nifty afloat in the green. Adani Enterprises is down, but Adani Ports on the other hand is clocking in gains of 1.5%. M&M also in focus as it is likely to exit from its stake in RBL Bank. SBI continues its upward trajectory. Axis Bank is also in the green. Some of the auto names like Maruti Suzuki in the green. HUL also in the green. I want to just do a check on the shares of Britannia. Good set of numbers, and of course we also have a CEO who will be joining in. I think he's coming in from Birla Opus. So that's also being viewed as a positive. Rakshit Hargave, he will be joining Britannia after resigning from Birla Opus as the CEO. So that's also one bit of good news that has come in, and which is why the stock is up somewhere around 4% or so. Well, with that we've come to the end of this edition of Opening Bell. Of course, we'll be back with the management of Pine Labs. The IPO opens up for subscription tomorrow, and today we'll be getting you the management to talk about the post-IPO growth plans and vision for the company, and in lots more, of course. So tune in for that. That's around 1:15 p.m. today. So I'll see you then. Thanks a lot for tuning in. Stay tuned to Money Control. Have a great day.